Is an FHA home loan right for you? I hear a lot that FHA loans are always for first-time home buyers, but that is just not the case. Anyone can get an FHA loan if you can qualify for the FHA loan program. When you're talking with an experienced mortgage lender, it's going to really be your best bet because there are so many different loan programs out there. But if you want to know the scoop on FHA loans, stay tuned because I'm going to chunk it down here. All right, so what are the credit score requirements for FHA? FHA will actually go down to a 580 credit score. However, when you get down to that 580 credit score, the down payment is going to increase. So generally we'll say if a buyer has a middle credit score of 600 or higher, and if their home loan is approved through the automated underwriting system, then with the FHA you can do as low down as 3.5% down. But if your credit score is lower than that, that's where you will see an increase in the down payment. Again, not all lenders will offer FHA loans down to a 580. So while FHA has that guideline, if you are in that situation, you're going to want to be sure that you talk to a lender and ask them what their minimum credit score is, because sometimes lenders will have different credit score requirements than the actual lending guidelines. So with credit, it's going to be the middle credit score of the 3 credit bureaus. If you have 3 reporting, if you only have 2, then it's going to be the lowest credit score of the 2. And if there are multiple borrowers on the home loan, it's going to be the lowest middle credit score of all borrowers. So let's walk through that. Let's say that you and your significant other are going to buy the house, and maybe your middle credit score is a 680, but your significant other's credit score is a 620. Then from a lending standpoint, 620 is what's going to be used from the home loan approval process. Now, one of the cool things about FHA is that interest rates are not impacted based on credit score like they are on conventional home loans. And this is a really big deal because on a conventional home loan, when you start to look at credit scores, 740 to 720, 720 to 700, all the way down in kind of this 20-point increment, you will likely see some type of adjustment on the interest rate or cost in addition to down payment. So a lot of variables on conventional home loans. FHA's easy peasy, meaning that it's 3.5% down as long as the lender will offer that. Let's say it's 600 or higher credit score for easy sake purposes, and your interest rate is not driven by your credit score or your down payment. So we like that with FHA. Now, FHA does not have income limits, and this is also important. A lot of people think, oh, it's first-time home buyers only. Nope. And it has income limits. Nope. What it does have is FHA is going to set the maximum loan limit based on the county that you're buying the home in, and that can vary across the country. So if you're interested in FHA based on a certain area, be sure to reach out to us or another lender that lends in that area, and we can let you know what that maximum FHA loan limit is. That loan limit changes every year. So come December, we will get notice of what the new loan limit is going to be for next year. The down payment requirement is 3.5% unless you're using down payment assistance. And this is another kind of aha, because people don't realize that there are many down payment assistance programs across the country. In fact, I have a video on a 100% financing for FHA that uses down payment assistance. So be sure to stay to the end because that video will show next. Okay, so when we get into closing costs, again, closing costs are one of these big kind of ambiguous phrases. And I like to really kind of chunk that down for buyers because not all closing costs are lender related. So let's go through them. When we think about lender related closing costs, we're going to think about, is the lender charging an origination fee? Is the lender charging discount points for that interest rate or the program that you're using? So for example, if you're using a down payment assistance program, a lot of those programs set their own rates. So are there discount points associated with that rate? That is a cost for the interest rate. That's what discount points are. You're paying to get that rate. You're going to have an appraisal fee that is going to be passed through to the appraiser doing the appraisal on the home loan. And then you're going to have title and escrow fees. So that is going to vary based on the area and based on the purchase price and down payment. And so those monies go to the title company. But from a lender perspective, the only other real fee other than origination, discount, appraisal that passes through is going to be their fee. And so most lenders will charge some type of doc prep or underwriting or processing fee. Ours happens to be $14.95. That's our flat fee to navigate your home loan. But every lender will have a different kind of fee structure, but that's about the norm. Now, outside of those fees, closing costs also include the amount that it's going to cost for you to set up your escrow account. And this is important because this is why we see closing costs really increase. So a couple things. You're going to pay your first year of your homeowner's insurance, which is going to be included in your payment, but you have to pay the first year to your insurance company at close of escrow. So let's call that $1,500. Okay, that gets added to your closing cost. And then the lender is going to set up an escrow account, which is kind of like a little savings account. So at closing, 2 months of your homeowner's insurance, 2 months of your property taxes on average, those get deposited into your escrow account. And then every month when you pay your payment, part of your payment is set aside for property taxes and homeowner's insurance. Those amounts get deposited into that escrow account. So when property taxes and homeowner's insurance comes due in the subsequent years, then the lender has what they need to be able to pay those on your behalf. Wow, that was a whole lot, right? I know, like slow it down, Kelly. But it's just so important to know that closing costs is a really big kind of phrase, and when you're going through this process, you want to talk and really be sure you understand what are the lender fees, what's the title and escrow company fee, what is the appraisal fee, what is your homeowner's insurance fee, what are the escrow impounds or escrow account deposit. All of that together will make up what the total closing costs are. Now, a good thing to remember with FHA is that the guidelines allow for the seller to contribute up to 6% of the purchase price towards your closing cost. This is kind of cool, so let's think through it. If you're buying a $500,000 house, 6% of $500,000 is $30,000. Well, your closing costs aren't going to be $30,000 very likely. So, unless maybe you're on the East Coast or a really high property tax rate, but I highly doubt it. Most closing cost ranges are anywhere from kind of call it maybe $8,000 to $12,000. Again, that discount point will really change that number, but on average, let's just say kind of $8,000 to $12,000. So with that said, then the seller could contribute as part of your negotiation of the purchase of their home to pay your closing costs. So that's a real win with FHA. We like that a lot. Now let's talk a little bit about the appraisal process. With FHA, you are going to have a full appraisal. It's important to know that FHA home loans have been around since the 30s. That's right, like 1937. HUD developed this home loan program. So this is a government-backed program, and it's really around to help home ownership and to bring home ownership to our country. And so when we think through the appraisal process, kind of know that the FHA appraisal process is going to require certain things. So for example, if there are any broken windows, the FHA loan guidelines are going to require that those broken windows are fixed prior to close of escrow. That's going to be called out by the FHA appraiser. One of the most common ones we see here in Arizona is on the patio outside. The overhang on the patio, many times because of the heat, the paint starts to peel. Well, on an FHA appraisal, it's very likely that that's going to get called out. The seller will have to scrape it, repaint it, and the appraiser is going to go back out and ensure that the home meets FHA's criteria. So a lot of people are like, oh, the FHA appraisal process has more requirements. It really does in just a few areas, but really these are areas that protect you as a buyer. So, take that as a win. And the appraisal will be ordered at a certain time during the home loan process. And the lender is going to order the appraisal through an FHA approved appraiser and through their process. So generally that means once you find a house, you've negotiated a contract, the lender has the contract, and then you're going to work with your agent, your real estate agent, to set up the home inspection. The home inspection is really important. First of all, that cost is generally paid out of pocket to the inspector at the time of the inspection, so it's not included in those closing costs that I referred to earlier. Secondly, your real estate agent is going to help you through that inspection. So there's going to be an inspection report, and then you're going to be able to ask questions based on that report. And if there are items that you're concerned about or your real estate agent is concerned about, then this is where maybe the negotiation goes back to the seller, if it's something that is a big deal. If it's not, you understand kind of what you're getting into. So this inspection is really important, and having a real estate agent that can help navigate that inspection is also important, because you don't know what you don't know. And you know, there's a lot that goes into those home inspections. So once you're through the inspection and you're confident you're proceeding with purchasing that house, and your real estate agent says, yep, go for it, then at that point, that's when the lender generally will order your appraisal. The appraisal can take anywhere from 3 to 7 days, just depending on the area. Could be longer if it's rural, but on average, we'll call it like 3 to 7 days. Once the appraiser completes the appraisal, they're going to submit it back to the lender, and we're going to be looking at a couple of things. One, we're going to see, did the house appraise at the purchase price? If it did, great. Then we're going to go into the conditions of the home, and we're going to see what the appraiser said about the home. All of that on the appraisal is very important, because we as a lender have to certify that that home meets FHA's criteria. So we're reviewing that. Once everything is dialed in and it looks good, then we're going to send a copy of the appraisal to you so you can take a peek at it, and then we're going to proceed with the process. So that's kind of how the appraisal works. We do try to get that appraisal done earlier in the process. That way, if there is anything that comes up, maybe there's a condition, or maybe it's a subject to, meaning that the appraiser said, hey, that fascia board on the back patio needs to be scraped and repainted before close of escrow. If conditions do come up, at least we can give the real estate agents notice that there is something that needs to be repaired before we can close escrows. Bankruptcies. One of the things about FHA that is just really important to know is that it is very user friendly, especially after life events, meaning maybe there was something that went on medically related, maybe not, maybe you just got in over your head and you had to file a bankruptcy, or maybe there's a short sale, or maybe there was even a foreclosure. These life events, when you're looking to buy a home after one of these life events, FHA is a very user-friendly home loan program. The waiting periods are less than a traditional conventional home loan. And again, just kind of that old make sense approach is very important with FHA and with lenders. So if you have met the waiting period post one of those life events, and you're ready to buy a home again, FHA is very likely the home loan program that you're going to want to check out. Now, is this the right home loan for you? Well, as I mentioned earlier, the only way to truly know the best home loan program for you and your unique financial situation is by talking with an experienced lending team. There's just so much, I cannot stress this enough, that goes into choosing the best home loan program for you. If you would like to explore the options you have, click the link below to schedule a personalized consultation with one of our advisors today. Our job is to present the facts and help you create a financing strategy that helps you achieve your goals of home ownership. Thank you so much for watching, and stay tuned for our very special FHA loan with no down payment coming up next.